Hi guys, I know this is super last minute. I literally sent the invitation about 7 minutes ago. So sorry about that. Things have been a little bit crazy here. I am currently streaming onto my YouTube channel, my Facebook group, and my Facebook business page. So I'm going to pop onto my phone real quick and just make sure that this is working because it has been bananas over here. So let me get into my group real quick and make sure that we are live, which I think we are. Yep, there we are. Now, I did send out the invitation like 7 minutes ago, so I'm not sure if any of you are going to be able to pop on. But if you do, please go ahead and say hi so I know you're here. Also, remember, I'm streaming with StreamYard. So if you want to ask questions, in order for me to see your name, you just have to grant StreamYard permission. Otherwise, it literally will just tell me like somebody from YouTube is asking a question or somebody from the Facebook group. I won't actually know what your name is. And if you ask a question, I'd love to be able to respond with your name. So for those of you who are new here, my name is Danae Wolf. I am a financial clarity coach and profit strategist. So what the heck does that mean? It really means that my job is to empower entrepreneurs to understand their business finances. I believe that knowledge is power, and if you understand the way the money stuff works in your business, you're going to be able to make more money. So that's really what I am passionate about and what I'm driven toward doing. And I try to go live every week in this group. I took off last week because it was Thanksgiving. But I try to go live every week and give you guys some free knowledge and tips that I hope make your life easier when it comes to all the money things. So today we are talking about the car and mileage deduction. I think that this is a pretty popular one. A couple weeks ago, we did a whole training on the home office deduction, which is another popular one as well. But today I wanted to talk to you guys about how the whole car and miles deduction things work when it comes time for taxes. My goal is over the next couple of weeks to do a lot of these tax talks because it's almost tax time, right? So we want to make sure that we're ready to go and that you guys understand how this all works. I just feel like if you understand how the taxes are actually structured, you're going to be able to make more informed decisions and you're going to make sure that you only pay the taxes that you owe. I don't want you to have to pay a penny more than what you rightfully owe. So that's where this comes into play. So I think that most of you, just from the conversations I've had with you guys, you're aware that you're able to use your miles or different payments associated with your car as a write-off, as a tax deduction, right? Claiming it as a business expense, which would, of course, lower our taxable income, which would, of course, lower our tax bill. So there's a lot more that kind of goes into it. And what I typically see is people will just purchase a car and then sometimes they will purchase it in the business's name. This seems to be something very popular. They purchase it in the business's name because the assumption is, well, if I put it in my business's name and I throw a logo on it, the whole thing is now tax deductible. That's actually not how it works, and we're going to get into this today. And then sometimes they don't buy it in their business's name, right? Maybe it's a personal car, but then again, they throw the logo on it. You guys love to get logos on your cars, right? And we do that because it's a very common assumption that that somehow makes it business use and now you're going to get this tax deduction. So I kind of want to break down how this all actually works because I've been there when I was a new entrepreneur. I purchased a vehicle. I purchased it in my business's name and I threw a logo on it. So I was like, okay, now in my head, I was like, everything's free when it comes to the car. So it doesn't quite work like that. So we've got a comment. Give me 1 second. Hey, Denise, how are you? She granted StreamYard permission so I could see her name. All right, so let's get into it. So if you guys were here for the home office deduction, there's going to be a lot of similarities when it comes to the car and mileage deduction. So the same thing as we had with the home office deduction where you could do the simplified method versus the actual expenses method, we've got the same thing when it comes to our vehicles. So when it comes to taking this deduction, you have two choices. And let me just do a little timeout here. I just put this whole presentation together. So if there are typos, I'm sorry. I didn't proofread them. But okay, there are two options when you want to claim this tax credit, which I think you should. This is a rightful credit. Again, my goal is for you to never pay a penny more than what you rightfully owe. So if there are legal tax deductions, let's take them. So you guys have two options here. The first is you could take a mileage deduction, just the standard mileage deduction. And the second option is the actual expenses method. So here is how this works. The very first step begins with tracking. Okay, so whether we're going the standard mileage deduction route or we're taking the actual expenses route, the first thing you have to do is track your miles. And it has to very specifically be put in a log. And we've got another comment or question. Let me just check. Hey, Steph. So we have to make sure that we're tracking our miles, and we're going to have to know, was this a business trip? So are these miles business related, or are these miles personal? Now, there are all sorts of ways that you guys can track this. So QuickBooks Online does it. They have a great little app. You literally can do it right from your phone. Mile IQ is another one that I like. But if you guys just want a totally free method, I'm going to have a free download for you. Now, I just, like I said, threw this all together. My nanny's going to be out for the next 2 weeks. She got the vid. We got all kinds of stuff going on around here. So I made you guys the tracker, but it's not pretty yet. And you know I can't give you something that's ugly. I'm going to show you on a share screen, but it's not ready for download. But when it's ready for download and I've made it nice and pretty, then I'll let you guys know and I'll post it in the group. But step one is we're tracking our miles. So this literally means every time you get in your car, you are logging if this was a business trip or if this was a personal trip. Two things that I want to make clear here. First of all, if you are driving from your home to your office, and your office is where you mostly work. So if you have a business that's a brick and mortar and you report to work at an office, you can't count that commute. Now, let's say you drive to the office and you leave the office because you have to drive to a meeting with your social media manager. Driving to that meeting is going to count as business deductions, but you actually just driving to your office every day does not count. Okay, so just want to throw that out there. The second thing is, the best way for this to be successful and accurate is you really need to know what your mileage is at the beginning of the year and at the end of the year. So if you just literally take a picture of your odometer on December 31st, okay, that's what I want you guys to do. This is so easy. It will take you 2 seconds. Snap a picture of your odometer, and literally you can save it in your phone in an album, email it to yourself. There's all kinds of things, right? We all know how to save a picture. Just take that picture, because the year later, the next year when you're like trying to do your taxes, you're going to be like, I don't remember what my odometer started at. So we want to know where we started. So let's do some very round numbers here. Let's say you take a picture of your odometer on December 31st and there's 100 miles on it. Now, all throughout the year, you are logging what was business and what was personal. So you've got 100 miles on the car. At the end of the year, you now have 200 miles on the car. You look through your log and you see that 50 of the miles were business related and 50 of the miles were personal related. That means that 50% of the time that you use the vehicle, you used it for business purposes. And I'm going to tell you why you need to know that percentage in a second. But again, step one is we just want to track our miles. So on December 31st, snap a picture of that odometer, and then every single time you get in your car and go somewhere, you're just going to log it, whether you're using Mile IQ, whether you use QuickBooks Online, or you download the absolutely free tracker that I've created for you. So we start with tracking it. Now, if we choose to go with the standard mileage deduction, all you have to do is track your miles. Now, the IRS will give you a specific amount per each mile, and that is what you multiply. So, if it's right now it's 57.5 cents, you multiply that by as many business miles that you drove, and that's how you determine your deduction. Now, every year you are going to want to check just to see if they've changed what that standard deduction is. And I'm going to share my screen with you guys. Give me 1 second here. Okay, so I'm just on irs.gov. All right, so right here you can see that in 2020, it's 57.5, but you can see that in 2019, it was 58. In 2018, it was 54.5. So it does fluctuate. So I would just always make sure that you have the most up-to-date number from the IRS so that you make sure that you're getting the proper deduction. So again, you track your miles, you figure out what was business, what was personal, and then you're able to claim for 2020, it's 57.5 cents per business mile. So here is what I have created for you. So right here, and let me share this screen again. Okay, so right here, what I've done, again, it's so ugly, guys. I can't even look at it. We need to get logos. We need to get colors. It needs to be prettier. But this is how it's going to work. You would simply type in all of your miles. And what I have right here is the 2020 rate, okay? It's going to automatically calculate for you what your deduction is because it's going to take all this miles that you enter in, okay? It's going to take all that information, multiply it by that rate, and then it will put your total right here. So each month of the year, and this is a second tab, which I don't think you guys can see. Let me move. There you go. So in this second tab right here, you'll enter in your business miles in this tab. And then right here, it'll automatically calculate it for you guys. So it makes it really easy for you. You log all of your business miles. It will multiply it by the 2020 rate. And then it's going to tally it all up. So you can see in this example for 2020 so far, the deduction is $172.50. So this calculator, this tracker is just going to make your life really easy because it's going to automatically do the math for you and tell you based on the 2020 number. Now, if 2021 has a different number, I'm sure I'll go live or something or tell you guys, but it'll be very easy for you to simply go right here in the business mileage log and just update it. You'll just update what the number is. And what I'll do is once I get this tracker nice and pretty for you and ready for you guys to see, I'll just put a little tutorial on how to do that. Super easy. You're just going to type in the numbers and change it for 2021. So we track the miles and then we do the math, which you don't have to if you have my calculator. It does it for you. But we multiply each mile by whatever the IRS deduction is. For 2020, it is 57.5. So then you get whatever the number is. So let's say it's $500 for the year, so whatever it ends up being. That is now a tax write-off, which means that it is going to deduct from your income. Okay, so your taxable income is going to be reduced by this new business expense, this new $600 mile deduction. So when we reduce our taxable income, what do, guys? We reduce our tax liability, which means you're going to pay less taxes. And again, like I said, I only want you guys to pay taxes you rightfully owe. So if we legally can take these deductions, we should go for it. Now, the reason why a lot of people choose this standard mileage deduction as opposed to the actual expense method, which we're going to get to in a second, is because of the simplicity of it. All right. So all you have to do when it comes to this mileage deduction is track where you're driving. You need to track and know what were your business miles? And as long as you have that picture of the odometer, you can keep everything nice and organized. You're going to have the proof, right? You take a picture on December 31st. It shows that you have 100 miles. You take a picture on December 31st of the following year. It shows you now have 200 miles. And everything is all lined up to prove that you put 50 of it was considered business mileage. So you don't need to keep a receipt. There's not any type of, documentation you would have to give for them except for this mileage log and the odometer proof. So it's really, really simplistic, and that's why most people take this route. Now, the other option is to do the actual expenses method. So if you guys remember from the home office deduction, it was very similar, right? With the home office deduction, we could do that simple method where it was a flat fee per square footage for our office, or we could do the actual expenses where we took a percentage of the different house bills. It's the same thing when it comes to your car. So you do step one, we log all of our trips, right? All the trips. Every time you get in your car, you're logging it. Was this personal or was this business? And let's say, as an example, we've driven 100 miles for the year and 50 of them were for business. We now know that the total miles are 100. The total business miles are 50. So what's that percentage? 50%. But just in case it's not as simple as a 50 to 100, I did put this in here for you guys. If you go to using the total vehicle expense tab, you're going to be able to type in your miles, and then you type in your total miles on the vehicle, and it will do the math for you. So in this example, it's showing that it's 4%. So the tracker is going to make your life really easy. All you guys need to do is enter in your miles. Was this personal? Was this business? Once you've got that entered in and you put in the total miles on the car for the year, it'll automatically calculate for you what the percentage of business use was. Now, here is why we need that percentage if we go the actual expenses method. So when you go the actual expenses method, you are able to tally up your gas, your oil, the repairs, the tires, everything I have written here. You're able to tally all of that up for the year, which that could be a lot, right? We're talking about a lot of money here when you think about all your oil changes, any repairs you had done to the car, if you got a flat tire, if you needed new tires, your car insurance, your fuel, your registration, fees, licenses, all of these items, we add them all up, and then you are able to take the percentage that is business related as a business deduction. So sticking with our flat fee of 50%, let's say that all of the car expenses for the year were $5,000. And you did the math on this tracker that I made you, and it says, hey, your business percentage is 50%. You know that you now got a $2,500 deduction. So this is why the tracking is so incredibly important. And I have a comment I just want to automatically is like my spirit animal. I love that word. Anything that I can automate these days with 3 kids at home, I need to automate it. So what's really, really great about this method is most times, unless you are driving all over the world, most times this is a much bigger deduction. Okay, you're going to get a lot more of a tax incentive if you go with the actual expenses method. But I want to point out a couple of things, okay? So first of all, you are going to need to keep all of the receipts. All right, so you're going to have to keep all of the receipts because you need all of this documentation. Second of all, if you leased your vehicle, okay, if you leased, and this is a really important point, guys, if you leased your vehicles, then all of the lease payments can be tallied into here, okay? So those can all go into your total, because remember, and I'm going to go back to my spreadsheet here. So you are going to type in all of your business expenses, right? So you can see it as an example here. I have a lease payment, I have gas, I have oil change, all of the car things, and then this will automatically calculate for you what the percentage is. So in this situation, it's 4%. So we have these random, this is all made up stuff, but expenses in here, and it calculates for me that at 4% so far, I have a $19 tax deduction. But we're going to have receipts for each of these items that we log. But if the car is purchased, okay, if the car is not leased, if it is a purchase, if you owned this car, you cannot put the car payment on there. So this is where a lot of people make a mistake. So typically what I see is people buy a car, they throw a logo on it, and then they just run all of the expenses for the car through their business checking account, and they think they're going to get 100% credit for it. They're going to get a tax deduction for all of it. That's not actually how it works. And if you were to get audited, you would have a problem. So again, I know that a lot of this stuff I teach on here, you guys are probably like, well, that's not how I do it, and everybody does it the way I do it. I don't doubt you. You probably know a lot of people doing it the way that you do it. I am just telling you how it is supposed to be done. Hashtag not a lawyer, hashtag not your CPA. You have to, use your best judgment here, but I'm just telling you the proper way to do it. So the proper way to do this is your car payment cannot be counted if you own the car. If you lease the car and that lease payment is $500 a month, then every single month you're going to log $500 as a car expense, and then you'll get that percentage. So if it's 50%, you're going to get a $250 tax credit or business deduction every single month when you have that lease payment. If you own the car though, okay, it's not like all hope is lost. If you own the car, you just have to depreciate it. All right, so you can see there it says licenses and then end depreciation or lease payments, right? So I'll probably do a live on depreciation at some point, but let me just kind of give you the Cliff's Notes. So let's say at the end of the year, because this happens a lot, I've probably done 4 or 5 calls of these over the last couple weeks, just talking to clients, because at the end of the year, people start thinking, how do I reduce what I'm going to owe in taxes? So everybody's initial thought is, I'm just going to buy a bunch of stuff so that I don't have to pay taxes. So I've had several calls in the last couple of weeks where people are like, I'm going to go buy a new car because it's going to be, 20 grand, 30 grand, and then I'm not going to owe any taxes. So that's actually not how any of this works. So what the government has said is you cannot just go make a big purchase and then take and claim that all as a business deduction, therefore reducing your taxable income, therefore reducing your tax liability. You can't do that. So they make you depreciate it. That is just a fancy word that basically means if you buy a high ticket item, so you bought a piece of equipment for your store or your business, you bought a car, you bought whatever it is that you bought, that's a machinery, equipment, something that is going to have longevity in your business, okay? You're going to be using it and reaping rewards from it for the next couple of years. You have to depreciate it. And typically, this is at about $2,500 or more. Some CPAs will tell you $1,000. It's kind of all over the place, and that's a lie for another day. But here's what you guys need to know. If you purchase a vehicle and it's yours, you're going to have to enter in the purchase price. So again, we are going to use really round numbers here. All right. Let's say you bought a car for $5,000, and let's say the shelf life of this car is 5 years. All right. You're going to depreciate it. So that means in year 1, when you buy the car, you don't get to put $5,000 as the expense. Instead, you have to take the purchase price and divide it by the 5 years, and you get that deduction every year. So in this situation, you're going to get $1,000 deduction. All right. So when it comes to that, if you own your car, I strongly recommend speaking to your CPA about this, just to make sure that you have a depreciation schedule, that everything's been entered in correctly, and you are doing this the right way. If you lease your car, you don't have to worry about any of this. The full payment that you make every month, that lease payment, is going to go right onto this spreadsheet, and you're going to auto-calculate it, and everything's going to be great. The other thing that I wanted to point out, parking and fees for like tolls, those are deductible no matter what. So if you take the mileage deduction, you opt for that easy method of just getting cents per mile, you can still have a business deduction of parking fees or tolls. If you do the actual expense method, you can still take this deduction as well. So regardless of which one you go, you always get to write off tolls or parking related to business trips. Now, one other caveat that I wanted to throw out here. If you are an LLC or a C Corp who is elected to be taxed as an S corporation, you need what is called an accountable plan. I don't want you guys to overthink this too much. It is literally a piece of paper. It is just one of those silly types of formality things that the accounting world has, and it's bananas, but you need an accountable form, okay? Accountable plan. Let me pull it up on the screen. Okay. You need an accountable plan. So all an accountable plan is it's a document set in place that allows your business to reimburse employees for business expenses. Now, remember, if you're an S Corp, you're on payroll yourself. You are an employee of your business if you are electing to be taxed as an S Corp. So you need this accountable plan in place. It is a one-sheet page, okay? It's just going to outline that you're saying, hey, the business agrees to pay back yourself for 57.5 cents per mile, like for whatever it is, whether you choose to go the mileage route or you choose to go the actual expenses route. This is just a piece of paper you have to have. If you get audited, you're going to wish you had it. It will take 2 seconds to write it up. You can find templates online. You can email your tax provider. They'll probably respond with a standard template they use. Just get the accountable plan in place, because if you don't, then your business could reimburse you for these car expenses, but then it's going to count as income for you, which means you're going to be taxed on it, which is just a disaster. So just put the accountable plan in place. I'm not exaggerating when I'm telling you it is one page. It is just this short little template that essentially says your business is agreeing to reimburse their employee, aka you, for X, Y, and Z when it comes to the mileage. So let's go back to this resource. So again, step one, regardless of which method you guys are using, you are going to log your business miles in here, okay? And what's going to happen is it is going to multiply it by the 2020 rate, all right? And then in the second tab where it says, let me remove this so you guys can see, hold on. Okay, so you're going to put your business miles right in here, and it's going to calculate it by the current IRS rate. And then in the monthly mileage summary right here, it is going to give you each month what your actual tax deduction is, okay? So that's for you guys choosing to take the standard deduction. Then if you want to go with the total expense, okay, the actual expenses method, you guys are going to log all of your vehicle expenses in here, okay? So we're talking gas, we're talking if it's a lease, the lease payment, your oil changes, new tires, tire rotation, all the things when it comes to your car. It's all going to go on here. And then what you guys are going to do is you're going to enter in your odometer, what it says, the odometer at the end of the year. So now we're going to have, as an example, December 31st, 2020, whatever the miles is. Then we're going to have December 31st, 2021, whatever the miles are. And the spreadsheet will automatically deduct and do the math to say, hey, this is the business that you entered in. You said you did, 50 miles in business, and you added 100 miles total to the car. So the spreadsheet will automatically tell you you're now at 50%. So all you have to do is get all of those expenses entered in, and it's going to calculate for you what the 50% deduction is. And it just keeps everything nice, organized for you, and it makes sure that you're not leaving money on the table. I want to make sure that you're getting absolutely every tax deduction that you are owed. So like I said, I really just threw this together. It has been hell of a week, and it's only Wednesday. So once I get this spreadsheet nice and pretty and ready for you, I will post it. If you're on YouTube, the link will be here at the bottom. If you're on Facebook, the link will be up at the top, and you're going to be able to download it. It's completely free. It's literally just an Excel spreadsheet. You'll be able to open it on your computer and start logging everything so that you guys can be organized. And like I always tell you guys, I just really believe that knowledge is power, right? So the more that you guys know about this stuff, the more that you understand how it works, it's going to help you make better strategic decisions in your business. So I hope this was helpful today. I am so sorry that I sent out the invite so late, but I didn't even know if I was going to be able to hop on here. My husband has the kids right now and I can already hear screaming. So I will see you guys next week. And if you have any questions in regards to this topic, just drop them in the comments. And if you guys at me at Danae Wolf, then I see it much faster and then I can be way quicker to respond. So thanks for joining me. And